Hey, good morning. It's Mark Alexander with Benchmark Mortgage. Wanted to get a video out today, just a state of the market report because mortgage rates right now are plummeting. And I wanted to shed some light as to why this is happening and really what are the opportunities and how to optimize this so we can move forward at a better pace here. So, why are rates going down right now? Well, we had the Fed meet last Wednesday. They didn't lower the rates, but they hinted at a lot of things that will lead to the first rate cut in over 4 years. The last rate cut was in April of 2020. And so when we look at the upcoming Fed meeting of September 18th, there was expected to be a 25 basis point rate cut, but now it's looking like it's going to be a 50 basis points rate cut. And I'm already starting to see articles and tweets and things like that coming out about an emergency rate cut before this September 18th meeting. So we're going to have to keep an eye on this. And I'm going to be sending out videos almost daily this week just to give you guys updates through this. The other thing is that the big move here was that on Friday, we had a bad jobs report. Unemployment came in at the highest level since October of 2021, kind of coming out of COVID at 4.3%. And here's the biggest takeaway I want everybody to realize is that when there's fear in the market, there's uncertainty. This is why stocks are falling right now. As stocks sell off and all that money is getting moved into safer investments such as bonds or mortgage bonds. And when the money goes into bonds, it drives rates lower. And that's why we're seeing rates drop at a rapid pace right now. And we're going to have to keep an eye on this to see how things shake out. Now, what can we do to be proactive right now? And so for buyers right now, so anybody looking to buy a home in this market over the next 3 months, 6 months, or even 12 months, the best thing you can do, my best piece of advice is get pre-approved or get pre-approved if you haven't. We go through pre-purchase consultations with all of our clients, sit down and really give a good educational session and make sure you have everything equipped to be a smart buyer in 2024. Now, for homeowners right now, we want to start planning your refinance. Keyword start and keyword plan. We don't want to refinance yet, depending on your situation. Some people, it makes sense to refinance, but you never want to refinance straight out of the gate when rates just start to fall. I see a lot of people where they refinance too early. They pay a ton of closing costs because there's spam callers and solicitors reaching out to try to refinance too soon. And unfortunately, what happens is they get a better rate, but they paid a ton of closing costs. But here's some of the reasons you may want to start thinking about planning if you're a homeowner. Even if your rate is super low, like a 2 to 3% rate, it could still make sense to refinance, right? So we want to look at lowering payments, lowering your term, or both, and really just lower the interest that you would pay to the bank. The other thing is we want to use your equity potentially to pay off any higher interest debts, do a debt consolidation, things that could help your monthly cash flow and become in a better situation. Also, we use equity for home renovations, and we can also use it for future investments as well. So we want to be smart about how you use your equity and how we shift your rate. And so I wanted to share with you guys a live look at the mortgage rate market. This is off Mortgage News Daily, and you can see here we are just falling like a rock right now. And this isn't even updated to when the market opens at 10 a.m. for mortgage bonds. And so we're going to keep an eye on this. But if you look here, the last 12 months, we're at the lowest rate in 12 months. And if you actually stretch out, let's go to a more of like a 2-year window. So 2-year window, we're actually at the lowest point going back 16 months, right? And so we're going to keep an eye on this and see what happens here. But again, we're on the initial descent down, right? If you look back at 5 years, we've still got a ways to go to get back down here. And I don't think we're going to see the COVID rates, but we could see rates kind of continue to shift down here. So I'll keep you guys posted as we have this. Now, the last thing I wanted to show you guys was a Fed Watch report. So this is a probability report from the CME group, and it's live updates. And so right now, this is the next 8 Fed meetings. And if we look here, there's an 88% chance of a 50 basis points rate cut. There's already an 11% chance of a 75 basis point rate cut. And you'll start to see that the blue line here, where rates could go based off probability off the Fed meetings. And so if we look at the current September meeting right now, there's an 84% chance of a 50 bips rate cut and now 16% chance. So literally updated since I refreshed this. And then there's a 100% chance of an ease right now. So that is going to stay put unless, and here's the keyword, unless the inflation reports come out, the CPI, the PCE, if those come out different, that could shift where this goes. But as of right now, it looks like the Fed will be cutting rates for the first time in over 4 years. So hope this market update helped. If you have any questions, any scenarios, any comments, concerns, feel free to reach out. I've got a link below in the email where you can schedule a discovery call. Happy to go through and help out. Take care.